A few days ago, when news broke out that Facebook was in serious trouble, people just didn't believe it, thinking that Facebook would just pay a few billions of dollars in lawsuits, and that's it. After Apple made big changes about controlling user information, it completely collapsed Facebook. The company of Mark Zuckerberg has already lost more than $12 billion, and the value of the company has plunged by $700 billion. Yes, you've heard that right, $700 billion. Furthermore, Meta's chief financial officer shocked everyone when he revealed what Mark Zuckerberg was trying to hide for a long time, by trying to insist that his company doesn't have any problems. However, here's the truth. David Wayner, Meta's CFO, spoke about the massive losses that the company is facing, and according to David, they expect even bigger losses next year. Moreover, as we found out, there are many Facebook investors that are not very happy with Zuckerberg spending enormous amounts of money on Mark's new big project, and because of these expenses, Facebook is very close to collapse. One investor with more than $300 million in stock even asked Zuckerberg to immediately cut costs by laying off workers. But there's more. We finally have information about the real reason why Apple co-founder Steve Wozniak and novelist Stephen King have left Facebook, and why Elon Musk was criticizing the platform for many years. This is a very interesting situation, so let's explain it. Well, Facebook parent Meta Platforms posted results that fell short of forecasts, plunging the company's shares in after-hours trading. This comes after the social media titan struggles with its metaverse ambitions, trying to slash expenses amid advertising headwinds caused by global economic concerns. And even Elon Musk, CEO of Tesla and now the owner of Twitter too, has had some pretty colourful things to say about Facebook and Meta. Let's talk about all of this and more in today's video. Meta reported a net income of $4.4 billion, or $1.64 per share, down 49% year on year, and falling short of analyst forecasts of $1.89 per share. So, sales of $27.7 billion was somewhat higher than the $27.4 billion forecast, but again, they were down 4% from last year. The corporation also stated that its sales for the current quarter will be between $30 billion and $32.5 billion, which is at the lower end of average analyst projections. And if that wasn't enough, Meta shares fell 11% to $115 soon after the disclosure, bringing losses to more than 61% this year. Bank of America analyst Justin Post downgraded Meta shares to a neutral rating in a pre-earnings note, stating that the company's investment in the immersive virtual reality world known as the metaverse will continue to bring them down. Even with this economic crisis, the metaverse will cost an estimated $10.7 billion next year. Nothing can be achieved without risks, that's for sure. But is this too big of a risk? The claim comes after Meta revealed their plan to cut expenses by reorganizing certain departments and putting a hiring freeze as ad revenue growth slows. To make matters worse, an investor worth more than $300 million in stock asked the corporation to cut costs even further by laying off workers. In the earnings release, Meta CFO David Wayner stated the company has really struck down on expenses, but it also stated that its employee headcount would remain roughly flat from current levels next year. To put things in perspective, $47.2 billion is the value of Meta founder Mark Zuckerberg after the market closed. Zuckerberg's fortune, which was once valued at more than $130 billion, has dropped by more than 60% since Meta stock peaked in September 2021. This paints a picture bigger than what we think. After all, the global economy has begun to weaken as central banks, including the Federal Reserve, attempt to battle inflation by dampening consumer demand with rising interest rates. And now, the pressure shows in recent earnings reports, as Alphabet stock fell after the Google parent company failed third-quarter sales and profit targets. The company's YouTube advertising segment reported a significantly lower than expected $7.1 billion, compared to an average projection of around $7.5 billion. And according to Vital Knowledge analyst Adam Crisafulli, YouTube and social media advertising are often less resilient during economic downturns than other sorts of marketing. Zuckerberg allegedly told staff at a meeting explaining the company's cost-cutting strategy that he thought the economy would have stabilized by now. But of course, since it hasn't stabilized yet, they need to be much more careful. Well, when will these things get better? We know from the usual pattern that Meta Platforms' metaverse losses will worsen before they improve. The company's third-quarter reports indicated the worst profit shortfall and lowest sales for its Reality Labs subsidiary since the fourth quarter of 2022. This is when the Facebook parent reported separate numbers for its metaverse unit for the first time. And here's the thing, Not only is Meta having difficulty recruiting people to its product, but its stockholders absolutely despise it. This doesn't discourage Zuck though, as the company remains committed to its objective. David Weiner, Meta's chief financial officer, also spoke about the massive losses, and he said they expected the increase to continue next year. So, Reality Labs' operational losses will increase, and after 2023, Meta has plans to meet its long-term aim of expanding its total company operating income. The Meta branch's revenue was $285 million, a little more than half of the previous year's number, owing partly to poor Quest 2 headset sales. Operating costs increased to $3.6 billion in the most recent quarter, amounting to an operating deficit of $12.7 billion since the third quarter of last year. It's not like these losses are small, either. Either way, Meta blames the majority of shortfall on production expenditures for its new Meta Quest Pro virtual reality headgear, which was created this quarter and went on sale recently. But what's interesting is that the headset is 3 times the price of its predecessor, Meta Quest 2, and the $1,500 headgear has gotten enough backlash on its own too. But that's a video for another day. As you might expect, Wall Street wasn't pleased with the company's increasing emphasis on the metaverse. Analysts have cautioned that the massive expenses of metaverse infrastructure aren't going to yield sufficient returns for stockholders. Many investors feel that the company has lost sight of its focus, and well, it's the huge size of investment that has scared some. Despite the fact that the platform announced a number of workplace-related agreements like Microsoft and Zoom that would bring office functions into its metaverse, the projects don't appear to guarantee immediate returns. And then there are a lot of question marks on how the company plans to make holograms work easier, as they say, along with some other major inconsistencies. If the company's investment in Reality Labs wasn't enough to reassure investors, Zuckerberg's commitment to the metaverse on the company's earnings call was anything but. He talked about how they were doing historic work, categorizing Reality Labs' efforts in 4 areas: the Horizon World Metaverse social platform, virtual and augmented reality apps, and the infrastructure that supports them. Reality Labs' difficulties were matched by a 4% reduction in income from business assets such as Facebook, Instagram, and WhatsApp, which fell to $27.4 billion in the third quarter of 2021. Earnings per share were just $1.64, compared to the $1.90 expected by the market. The focus on the metaverse comes as advertising revenues are under strain due to macroeconomic concerns and the competition for a younger audience between Meta's Instagram and ByteDance's TikTok. So, many investors now feel that the more money Zuck spends on this idea, the closer Facebook is to collapse. And looking at the data we've talked about today, it's not difficult to understand why they might think so. And now, let's look at what one of the biggest tech moguls had to say about Facebook. Well, we're of course talking about none other than Elon Musk, who's particularly active on Twitter, but he appears to be less fond of Facebook. And when we say less fond, we really mean he doesn't care for it at all. The Tesla and SpaceX CEO actually labeled Facebook lame, adding #delete Facebook in reaction to an anti-Facebook post by Hollywood actor, writer, director, and producer Sacha Baron Cohen. Musk removed both the Tesla and SpaceX Facebook profiles in March 2018, claiming that he didn't know his companies already had pages on the platform. And this isn't anything political. The man literally doesn't use it because he simply doesn't like it. There's no ulterior motive, and there's definitely no peer pressure. Musk also deleted his Instagram account in August 2018, and he's not the only one. Apple co-founder Steve Wozniak cancelled his Facebook account in April 2018, and in July he advised others to do the same. While the fun on Facebook is enough for many, the lack of privacy and the shadiness isn't worth it for some others. If you find yourself getting bothered by all the privacy drama, maybe you should also follow Steve Wozniak's advice. While Musk didn't really explain why he considers Facebook to be lame, this isn't the first time he's openly blasted the social media network, or even Zuckerberg. After it was revealed that political consulting company Cambridge Analytica had acquired the personal information of up to 87 million Facebook users without their permission, he deactivated the official Facebook sites of his firms, Tesla, TSLA, and SpaceX in 2018. What's Facebook? Musk said at the time. He does have a personal Instagram account, as do Tesla and SpaceX, despite the fact that the site is controlled by Facebook. Previously, the industrialist explained that Instagram is alright as long as it remains autonomous and free of its parent firm. And that's not all. Musk has also used Twitter to dispute Zuckerberg's understanding of artificial intelligence, a topic on which they strongly disagree. After all, the founder of Facebook is all for AI, and he's wary of fear-mongering and people who speak against it. He also hopes the technology will make automobiles safer and help doctors identify ailments more accurately. And then there's Musk, who calls it humanity's biggest existential danger. Anyway, the criticism of Facebook by Baron Cohen and Musk comes after novelist Stephen King said earlier that he had left Facebook due to its inaccurate information and poor privacy protection. Well, that's definitely not a first, is it? Moreover, at TED 2022 in Vancouver, Elon Musk ridiculed Mark Zuckerberg for what he perceives to be excessive control on platforms owned by the latter. He went so far as to call him Zuckerberg XIV, a point in comparison to the notoriously oppressive French king Louis XIV. That's it for today. Subscribe to our channel and hit the notification bell.